Hey everybody, Danny here with Danny Murphy and Associates at First Team Real Estate. We're doing our weekly real estate market update here. And so what I wanted to do was we chat GPT'd the top questions that buyers, sellers, investors have about real estate. And so I want to start tackling those questions each week during these videos. And so a couple of the questions are, why is housing inventory so low, and how are interest rates affecting the market? So those two go hand in hand. I think that inventory is low because you have all these folks that have sub 3.5, sub 4% interest rates. And so people aren't selling their houses unless they have to, right? And so unless there's, we call them the 6 Ds: death, divorce, diamonds, diapers, distress. And so if you don't have these life events pushing you to be a seller and a buyer, you've just kept your house because you have a nice, really low interest rate. And so that's how interest rates are affecting inventory. We're at, really all-time lows in inventory right now. We're a little bit above where we were 2 years ago, but it's still pretty low compared to typical averages. And so the other questions were, is now a good time to buy and sell a home, and what's happening with home prices? And so on those two fronts, home prices have been, I'd say they've been pretty steady the last 6 months. We're up like 3.5% year over year in Orange County on home prices and home values, the median home price. And then there was a survey that was done recently looking ahead to 2030. So over the next 4 and 5 years, people are expecting home values to increase. There's sort of a low, medium, and high. So the average expectation for home price appreciation is in that sort of 5% per year range. For the next 12 months, though, it's a lower estimate because we've had such a big run since 2020. So I'm seeing between 2 and 3% appreciation over the next 12 months is what is sort of expected here for our local Southern California markets. And and I think that the interest rate expectations, this is actually kind of interesting. Right now, you can get a 7/1 ARM, so or 5/1 ARM that's locked for 5 years and can adjust every 6 months for about 5.75%. And then if you have the buyer, if they can get the rate buy down from, say, the seller paying a rate buy down, you can actually get into the high 4% range. So doing an ARM is great. It's a great way to have a lower interest rate, lower your payments, increase your purchasing power. And then with like a rate buy down that either the buyer pays for or the seller pays for through the negotiations that we do with the terms, you can even see rates in the high 4% range. So definitely, now I think as a buyer, I love the fourth quarter of any given year because you have really serious sellers out. The people that are on the market during the holidays, they want to sell their property. So they're willing to entertain good offers and negotiate terms. And the buyers that are out right now, I think are getting good deals because what will happen is in the new year, come really January and even into February, the buyers are out like full force. There's a lot more competition for you as a buyer when you start the new year. The holidays are behind us and the buyers kind of get out and start looking for homes at that point. So fourth quarter is a great time to be a buyer. I think it's a good time to be a serious seller. And hopefully these topics help. We've got hundreds of topics that ChatGPT gave us, so we'll be tackling those ratably as we go along each week. In the meantime, if you need anything on the real estate front, we're here to help and answer all of your questions and be your real estate advocate. Thanks.